So the bear still active in the market in many ways. We had seen a bit of a sell-off in the last two sessions. Things looked a bit better. What sort of trends are we likely to see given the international situation and the exogenous factors that influence this bourse?
I think Safaricom has driven a lot of investor and as well as the index down. It got to 3 shillings and 30 cents as of yesterday, and today I think it's at 3 shillings and 35 cents. But generally, I think the sell-off has been driven by global macro conditions. I don't think local fundamentals in terms of company fundamentals are still strong. And the GDP is still, we're still expected to see some growth this year. So I don't think the local situation is playing so much into the investors' minds at the Nairobi Stock Exchange. And I think it's more of a global macro situation and foreign investors selling off.
All right, let's talk about what we're seeing on the forex side. It's curious that we say that the shilling feels less pressure at 93 shillings 57, and I think that's just indicative of what's happened with the volatility and the depreciation of this currency. Better showing today. What are you expecting by way of the shilling's performance? Because also this week we got an indication from the central bank that they won't enter the market with reverse repos.
I think we expect to see further pressure on the shilling. It's mostly a balance of payment situation because there's still some import demand, and that will see a lot of pressure on the shilling. We don't see any incoming inflows, currency inflows that could strengthen the shilling. In terms of the central bank, they're really between a rock and a hard place in terms of policy decisions to mitigate the shilling's decline. And I think without injecting any more money into the money markets, I think that will play well into the shilling's hand. But I don't think it'll post any substantial gains over the dollar in the near term.
Right. Results coming through. Pan-African Insurance, not particularly impressive results. Some serious losses there, especially on the investment side. And that, had a bearing on the share price today, losing 5.17%. That's significant.
Exactly.
Just talk to us about Pan-African Insurance, and thereafter talk to us about the insurance industry in general. Because, whilst the banks have performed in Kenya, the insurers are a bit more tricky. Why is that?
I think with the insurance industry, what we're seeing is that a lot of insurers are raising capital, and that could have an effect in terms of premium pricing, with the premium pricing going low. Companies may be forced to sell lower premiums at a lower cost, and that will affect their underwriting claims and their underwriting profits. But with the Pan-African Life, it was heavily dependent on investment income. And with the markets the way they are, that was already going to suffer. But more so in terms of their sale of their stake in APA Insurance, that has really reduced their profits from other subsidiaries by 200 million over year on year. And that is what we're seeing with Pan-Afric. So I think with insurers, it's really a case of underwriting and liquidity. As you can see with the Jubilee, their profits are actually up. The investment income was actually up over the year. So I think it's the companies that really manage their investments well and ensure that they're not overexposed to the Nairobi Stock Exchange in terms of the investments.
Let's talk about some of the gainers in today's session. Mashuru spoke us through some of them, but we also had Standard Group doing well, gaining 5.2%. Housing Finance also doing well, 4.8%. Let's start with the Standard Group. Everybody's anticipating huge advertising and marketing spend ahead of the elections. Also, some of those tariff wars that we're seeing in the telecom space. It should benefit this particular service sector particularly well. But what about the broader operating environment? Inflation, higher costs of doing business, why are they not affected?
I think, you said it well in terms of increasing competition in the telecom space, the banking space, but as well as rising consumer spending. Because the bulk of advertising has been consumer-based, and as consumer spending will really affect advertising revenues, and that will go into Standard Group's bottom lines. And I think that's what investors are looking at. In terms of inflation, I think they do have some marketing, some pricing power in terms of their advertising, and that could really hedge against inflation. And more so, they're also really low in terms of their PE values. and that could be one of the reasons why investors are getting in at the current valuations.
Talk to us about housing finance. We do know that they had wonderful profit growth for the first half, but here's the situation.
Yeah.
As I said, with inflation creeping in, we are starting to see default rates and non-performing loans of banks starting to creep up slightly. We know the construction sector is taking a bit of a hit. So going forward, are we going to see stellar performance from a mortgage financier?
I think mortgage financing will still do well. Actually, the central bank released their half-year banking sector report, and non-performing loans, both from an absolute as well as a relative perspective, were down. So, I mean, in terms of the NPL aspect, it's mostly in terms of personal lending. But in terms of the non-performing loans to real estate and building and construction, they're actually down. So I still see some profits coming in from housing finance going forward, and that could go into their stock price. But as well, as again I said earlier, it's mostly a global macro issue right now, with the markets performing the way they did, especially after the S&P downgrade of US debt. So I think that's what's eating into our markets, because as I said, I think the company fundamentals are still on a strong footing.